What's up, YouTube? Today, I want to talk about something that is a hot topic in politics and in the news right now, and that is income taxes. All right, this is everybody's favorite topic, right? Income taxes. Well, right now, the narrative in the political world is that the wealthy need to pay their fair share. And there's this false narrative out there that wealthy people aren't paying their fair share in taxes. Well, is that really true? So in this quick video, I'm going to show you some tax history throughout the years and then compare it to where we are today. So let me explain the screen here before we dive in. On the top here, you can change the income that you're going to look at. And then here you can change the year of the tax that you want to compare it to. So right now we're looking at year 2021 with $100,000 of income. On the right-hand side, you'll see the year and the income, and then it'll tell you the marginal rate. So if you make $100,000 this year in 2021, you will be in a 22% marginal tax bracket. However, that does not mean that you pay $22,000 in taxes, because the first dollar that you earn is taxed at a smaller rate. And the more that you make, the margin or the tax bracket margin or threshold goes up. So the more income, those later dollars are taxed at the higher number. So $100,000 of gross income or total income, you're really only going to spend around $8,600 in taxes at the federal level. Doesn't include state taxes. In other words, it's around 8.6% as an effective tax bracket. So your 22% marginal tax rate, and on $100,000 of income, it's $8,600 effective that you pay in taxes. I think a lot of people don't understand that if you're in a 22% tax bracket, you're really not going to pay 22%. It's stepped up or graduated. So look at this. If I change my income to $50,000, I'm in a 12% marginal rate, and I'm only spending $2,500 or $2,600 in federal taxes. That's like 5% marginal rate. Not very much. So here's another takeaway. If I'm making less than 50 grand a year, I'm really not paying that much in income tax. And I think this is probably where this great divide is coming in America. You hear these politicians talk about how the wealthy need to pay their fair share. Well, a lot of Americans aren't paying any income tax. So let's look at some tax history and compare it to where we used to be. Let's say I make $100,000 today. I'm in a 22% marginal tax bracket. Well, I was born in the year 1982. And if we account for inflation, $100,000 of income today would feel like about $40,000 of income in 1982. In other words, $40,000 of income is going to allow you to buy the same amount of groceries that about $100,000 does today. So if I made 40 grand in 1982, what did my tax look like? So let's change it to 40,000 and change the year to 1982. On $40,000 of income, you would be in a 39% tax bracket. In other words, you would pay close to $6,000 in income tax. $6,000 on $40,000. So get a calculator and do the calculation. Take the effective tax, $5,894, and divide it by your income, $40,000. So effectively, you're in around a 14.5%, almost 15% tax bracket. That's a lot higher than it is today, isn't it? Well, look what happens if I go back a few years. Let's go back to 1975. You'd be in a 45% marginal rate on $40,000 of income. What was the highest tax ever? Watch this. If I go to 1944 and I made $200,000 and $200,001, you would be in a 94% tax bracket. You're hearing this correctly. 94% tax. Now, effectively, how much would you pay? $161,000 would go to the government. Imagine making $200,000 and only keeping $39,000. Where's the incentive to work? Now, if we look at 1944 and we consider inflation, there is that's a long time ago. So not many people were making $200,000 a year in 1944. However, there was one person that you've heard of. His name's Ronald Reagan. Ronald Reagan later became president, but back in 1944, he was making movies, and he would only make 2 movies a year. Why? Because he would make around $100,000 of income, and on his third movie, 94% of that money, of the income, would go to the government. And when you counted the state tax for the state of California, he's close to making nothing. So he would make 2 movies a year and then go back to his ranch and ride horses and hang out. And you can see here now how it decentivizes us to actually work hard when tax rates go so high. So here's the part that's interesting. Not many people were making $200,000 in 1944. But there was a war that was going on, and wars are expensive. Watch what happens if I just make $1. Your first dollar in 1944 was taxed at a higher marginal rate than what $100,000 is taxed at today. Your first dollar is taxed at a 23% marginal rate. I don't think people know this. Relatively speaking, we are in a very low tax environment. Now, the current president, Biden, wants to change all that. I was reading his tax proposal just this last week, and there's a lot of changes on the horizon. Capital gains changes, step up in basis changes, estate tax changes. Stay tuned for that. If you want to go in more detail like this, in my course, I cover a lot on the history of taxation and what it means for the future. Because what you do with your dollar after you pay your income tax will determine how many taxes you pay for the rest of your life. Your income taxes always do as you earn income. And when these politicians say the wealthy need to pay their fair share, it's really a joke. They're taxing the middle class, the income earners. Wealthy people don't earn income. They don't have jobs. If you think about Donald Trump, when Donald Trump was president, he was donating his income check as president. So he didn't even pay tax on his income as president. Do you know how much the Democrats hated that? It's hilarious. You have to understand the tax game if you want to be able to win. The challenge that most people run into is that they're postponing their tax inside of an IRA or a 401k to a future period where they can't even define what the tax rates will be. Your kids will be out of the house, so the tax credits are gone. Your house might be paid off by then, so you have no more mortgage deduction. You're literally retired, so you don't have any business deductions at that point. When these people go to retire in these later years, they might be in the highest tax bracket of their life. So when you work with people, make sure, when you work with your advisor, one very important question: what is my exit strategy? Because as politicians talk about how they want to make tax rates back to where they were, like in the 70s and 60s and 50s, you can see here it was drastically higher than what it is today. Let's do one more here just to show you. 200,000, 94% rate. Now here's something else I want you to consider too. You know, as a W-2 employee, you pay your taxes as you get a paycheck. You don't really feel the pain. However, when you go to retire and you start pulling money out of an account, you literally have to write a check to the IRS. Now, I don't know if you've ever written a 6-figure check to the IRS, but it is not fun. It hurts inside. You think to yourself, there has to be a better way. There has to be a way around this. If you're doing the traditional financial planning method and just save and postponing your income tax, I don't know if there is a better way, because your income tax is always due, and as soon as you try and evade income taxes, you're going to jail. Do not evade taxes. Learn how to avoid unnecessary taxes. And the first step in doing that is understanding how the tax code actually works. I go through all this stuff in my course extensively, so if you want to, there's a link below to check out the course. Also, if you like this kind of information, make sure you hit that subscribe button, and you can get more information. I hope you enjoyed this. Peace.